Hi, this is Mani from bsc2nse.com. So in this video, I wanted to talk about this very interesting topic that, a lot of people used to ask me this question like, is there any broker where I can invest in US companies like Apple, Microsoft, Google, and all that? So, but the problem is that the brokerages are way too high, and each share of, like let's say Amazon, one share is 1.5 lakh rupees here, and the minimum brokerage charges to invest directly into a individual US company is extremely high. So this is a very interesting topic that this was not available earlier. I was surprised that there is a ETF. I guess by the looks of the chart, has been there for the last 2-3 years. So I was pleasantly surprised to find that it is there, and I just want to spread the good news and possibly spread the news. And it's a very interesting option that you can consider for your long-term portfolio as a sort of a diversification, like one of the components in your long-term equity portfolio. And the general cover the basic topics of how people in India can invest in the US market, US market companies. Nasdaq is one of the most popular index in the US markets. So there is a fund, ETF fund here managed by Motilal Oswal called N100 ETF. So which is basically a ETF fund which tries to replicate the portfolio which is there within the Nasdaq. Okay, so index ETF funds have a lot of advantages. The fact that the fund manager will not try to figure out which is the best possible stock. So the judgmental mistakes of the fund manager is going to be reduced, which means it's relatively much safer than any other fund getting managed by a fund manager. There is a trade-off though, so they will just try to maintain or just try to beat the index returns marginally. So that's what they try to do. And individual US companies, like I said, mostly trade about $1,000 US, which means one share would be worth minimum 20,000, 30,000, or even a lakh, more than a lakh. So which most of our retail Indian investors will not be comfortable buying even one share of it directly. And there is a sentimental attachment and judgmental mistake that can come, meaning you can get, for example, one of my college mates, he works in Boeing, so he had a sentimental attachment towards buying into Boeing shares, and not through any mistake of him or the company, that they had 3 flight crashes, so their revenues took hit first, and then came Corona. So that was a second blow, wherein the entire airline industry is taking a hit. Their sales are taking a hit. So any company, any individual company has a higher risk than the overall index, the overall risk to the index. Risk to the index is 10 times lesser than in any specific individual company. So rather than getting attached to a single company, it's always better to invest into an index ETF fund. At least initially, when you are building your own portfolio, it's advised to start in ETF funds first, see some profits there, get some comfort zone, and then gradually, slowly, you can reinvest the profits from the ETF funds into specific stocks if you want. So that's always a better approach. The last point here being that USD to INR of 75 today may become 150 over the next 20 years, which means if Nasdaq goes by 10x and you invest in the Nasdaq index today, and 20 years later that let's say INR becomes 150, instead of 10x return, you actually get a 20x return, because you buy the stock when USD is at 75, you will be exiting and you will be taking out the money at the conversion of 150. So you get 2x returns here in currency, 10x from Nasdaq. So overall you make 20x returns. So this is a very good thing again. So let me show you, even when Corona has gone down, even when Nasdaq has gone down by 20%, in the ETF fund it has gone down by only 10%, because the currency conversion has covered the 10% risk. So let me quickly show you. You can Google N100 ETF fund. You will get this link, or in any other website. The top portfolio stocks that are involved in the ETF fund, you can see Microsoft, Apple, Amazon. Alphabet is Google. So Google company name has changed to Alphabet. And then Facebook, Intel, your laptop chips, Pepsi beverages, Comcast, I don't know exactly what they're doing. Cisco, I've heard a lot. Adobe, the PDFs that you open. Netflix, the movies that you watch. PayPal, International Paytm, Tesla Motors. A lot of people wonder, how can I buy Tesla? Where can I buy Tesla? How can I invest in Tesla sitting in India? So this is the best way to possibly invest, not just in Tesla, Starbucks. So all these companies put together. Let me show you. This is Zerodha interface. So once you come here, you just type N100 and you get the N100. You select it. This is approximately 1 unit is at 600 rupees. You can even just buy one share at 600 rupees. So you can see here, this is the N100 chart. You click on this, you get the chart, so which I've already loaded here. I've plotted the 9 EMA on a monthly chart. So this is a 9-month EMA, very similar to 200 EMA line. You can see that the fund has started somewhere in 2015, or I hope it has started. Initially, I think the volumes are very less, because any ETF fund or any mutual fund in initial days, the word of mouth spread is very, very less. You can see that there is a lot more interest today, a lot more volumes happening today, these days. And you can see that in the last 4 years, it has gone 3x. So you can gradually add it every month to your portfolio. And of course, taking into proper allocations, risk allocation to your overall portfolio and all that. You can see here, just before Corona, the peak value was around 700. During Corona, when Nasdaq had dropped 30%, it had dropped to 500, which is close to a 30% drop. But in the meantime, INR had also started depreciating. So INR had depreciated by further 10%. So even though US markets have not come back to peak values, this fund has again come back to peak values because of USD INR depreciation. So I would say this is a very good fund to invest whenever it comes close to the 200-day EMA or the 9-month moving average, and below it also definitely you can add with a little bit more exposure. So you can see that very little less time spent below the 200-day EMA, and whenever you accumulated in all these dips below the 200-day EMA, those would have been excellent points of accumulation. This is of course on hindsight, but generally even if it gets to 600, definitely it's now at 650. 600 is approximately the 200-day EMA now. It's an excellent point to accumulate. So that's it for now. I think I've done my job. I've spreaded a very good thing today, that how to invest in US markets sitting in India. And this is an extremely stable index, and US markets are 50% of, this is a point that I forgot to mention. I should have mentioned it here. US is pretty much 50% of global GDP, or in terms of market cap, or in terms of global market cap, and it's a growing economy. So definitely it's a good thing to look at. So definitely a very good option to have in your portfolio. So if any of your friends are looking how to invest in, how Indians are looking to invest in US markets, spread the word. Thank you. Bye-bye.